Hello everyone and welcome to the ACT Treasury Forum. Thanks to all of you for being involved in creating this event, especially to HSBC who have worked with us on this event. I think this is the 7th iteration, but the relationship has gone back far longer than that, probably to the beginnings of the ACT 40 years ago. There's a few things I'd like to highlight about today. We've got some keynotes from HSBC and the Bank of England, which I'm really looking forward to. And we've got some great main sessions around sustainable finance, data-driven treasury, balance sheet recapitalisation, and central bank currencies, etc. So do tune into all of those. We've got an interactive session at lunchtime around personal coping mechanisms, strategies under COVID. So please do join that so that we can share, compare notes. And don't forget to get involved through the day through Q&A and discussion in the discussion groups this afternoon. Take a look at the pre-recorded session, but also remember that all the content is available for 14 days after the event. So everything's being recorded and you can come back to it in case you'd like to go over something or you've missed things, because we are aware sometimes we get called away from things. The job has to come first, of course. Do visit the HSBC and the ACT stands in the exhibition hall. And if at any time you're having technical difficulties, the team's on standby to help you. But without further ado, I'd like to introduce and then hand over to James Mortimer. James, a fellow Northerner, is Managing Director, UK Head of Corporates, Global Banking and Markets in HSBC Bank plc. He has over 20 years' experience with HSBC in the UK, having joined in 2000. James is married with 2 girls, lives in Surrey, and is a passionate rugby and Newcastle United fan. So over to you, James.
Thank you, Caroline. I'm sure you will all agree the less said about Newcastle right now, the better. On behalf of HSBC, it is our pleasure to collaborate with the ACT in delivering this event today. Of course, this would have more classically run in the Grosvenor prior to the ACT dinner in November, and hopefully we'll return to that slot in the not too distant future. There are several big picture themes I thought it may be helpful to touch upon to help set the scene for the presenters and content to follow. It's not hard to start with reference to COVID-19 and the profound impact this has had on everyone, both personally and professionally. I hope you all, your colleagues and family, have managed to stay safe and healthy so far, and those not so fortunate are making a full recovery. I certainly didn't think when I left the office on the 18th of March it would be over a year before I returned, but it was remarkable how people quickly adapted to a new way of working and showed great resilience. The beginning of the crisis was very much uncharted territory, with no telling how the virus would spread, how it would be controlled, or how long the uncertainty would persist. I'm proud of the work we did in supporting our clients with significant incremental liquidity, guidance and access to government schemes, and a constructive approach to covenants and waivers. But what became clear quite early on was the profound acceleration of structural change in consumer behaviour, business models and supply chains, requiring the same degree of corporate resilience and adaptability as was asked of us as individuals. A strong business before COVID will likely become a strong business again post-COVID, and the behaviour of the rating agencies, debt and equity investors is evidence of the market's ability to look through the short-term challenges. Session C later will expand upon this theme, but we have seen corporates adjust up target liquidity levels and reduce down long-term leverage targets to provide greater financial resilience in the future. And with the focus on must-do activities being precedent in 2020, it is understandable initiatives like refreshing investment policies, assessing new ERPs or TMS setups, rationalising bank accounts, automating processes were not a priority for most, but will hopefully climb back up the agenda in 2021. We are eager to brainstorm with you and your teams on any of these topics, and I hope the content in Session A, rebalancing the holy trinity of liquidity, security and yield, and Session B on data-driven treasury will provide food for thought in this respect. One such topic I won't get into the detail on now is IBOR transition. This is a topic you'll hear a lot more from us on this year, and we would welcome the opportunity to engage with your working groups and assess the holistic risks within your individual businesses. The crisis is also accelerating the change in consumption behaviour and broadening the public support for a cleaner economy and for environmental responsibility. HSBC committed in 2017 to provide $100 billion in sustainable finance and investment by 2025. Last October, we significantly increased our commitment and set out a landmark ambition to become a net zero bank, aiming to reduce emissions in our own operations and supply chain to net zero by 2030, and to align our entire portfolio of financed emissions to a net zero by 2050 or sooner, in line with the Paris Agreement. The panel session at 12 p.m. will take a closer look at the next frontier in sustainable finance. Whilst there are signs lockdown is working and the vaccine is being rolled out at pace, at least here in the UK, where vaccinated people now exceed the total number of confirmed cases, this serves to provide some optimism the economy will recover at pace from the second quarter. Now at HSBC, we have dedicated a team of colleagues across products and business lines to help clients think through how we can incrementally support the vaccine rollout as the global nature of the ecosystem introduces new counterparties and risks for participants. Whether you're a pharma company, contract manufacturer, OEM, logistics, storage and distribution, or a medical institution, we would be delighted to engage with you about managing those risks, so please do contact your relationship manager. And just to echo a point Caroline made, the lunchtime session is really focused on one of the key risks I see for 2021, our people. It's been a long year working from home. There's a lot of differing circumstances we are all dealing with. So please join the session if you can, as we think through how to look after them and ourselves in this new normal. Now, after more than 4 years, the UK and EU finally agreed a trade cooperation agreement at the end of 2020. And whilst the deal goes beyond the scope of a typical trade deal, there are still some question marks, such as the EU yet to grant equivalence for UK financial services amongst them. Both sides will benefit from tariff-free, quota-free access, but bilateral goods trade will be subject to new customs formalities, such as custom declarations and border checks. I know from our discussions with many of you over the last few years that comprehensive plans have been implemented to mitigate the risk of Brexit, with the uncertainty we faced right up until Christmas when the deal was struck. Whilst for some, the experience since will have been smooth, with imports largely unaffected, exporters are finding the complexities of the new rules much more challenging, and it feels revisions to supply chains will be unavoidable in the weeks and months ahead. HSBC has for many years been a global bank with 2 home markets in the UK and Hong Kong. To manage the Brexit transition, our European platform now has 2 main hubs, with HSBC Continental Europe based in Paris, together with our full-service bank in Germany leading our coverage inside the EEA alongside HSBC Bank plc here in London. We are here to support your needs across Europe with colleagues on the ground in 19 markets. Yesterday saw the inauguration of President Biden after his blue wave success, and a lot has been made of the actions he is expected to take over the next 10, let alone first 100 days. On day 1 alone, he signed 17 executive orders, and among them rejoining the Paris Agreement. A US focus will add further momentum to the global ESG agenda. The $1.9 trillion stimulus package is his primary legislative priority, and is expected to reach a conclusion during Q1, and 10-year US Treasuries had already moved above 1% for the first time since March 2020 in expectation. That said, we continue to believe in a continuation of the lower for longer theme and see market conditions remaining attractive for issuers. Whilst there is expectation of lower supply overall this year versus 2020, in Europe, the first 2 weeks of January saw 28 billion euros of IG supply, which outstripped the whole of January 2020. Quickly on currency markets, we'll see what Biden's administration means for the dollar and other currencies, but cable is currently at a 2-year high, trading above 1.37. And with a less Twitter trigger-prone president, calm traders worries and focus the minds onto a world that has COVID in the rearview mirror, focus for growth and repairing the global economy. Last of all, if you have not had the opportunity, please do make the time to watch the pre-recorded session with Craig Ramsey around technology myth busting in 2021. It is a very good investment of 45 minutes. And with that, just to conclude with a thank you to our excellent array of speakers, panelists, clients and presenters who follow. But first of all, post this session, we'll be delighted to have Janet Henry, HSBC's Chief Global Economist, to share her outlook for 2021. And Janet's presentation will commence at 10 o'clock this morning. Thank you all for taking the time and enjoy the day.